Who is dumping the market as 30,000 old coins flee? Short-term investors stand guard. Is Bitcoin stable at 118,000? Will this determine the life or death of the bull market? The whale would rather lose 50,000 and run away in a hurry. Is Ethereum about to suffer a bloodbath? 300 votes determine fate. Dogecoin named as target of Qubic's next 51% attack. Regulatory support is in place. RWA track takes off. Wall Street giants line up to grab a spoon. With $35 billion in new government bonds, can stablecoins serve as a painkiller for Japan's finances?
Monday, August 18th, BitcoinTV English channel. Where is the Bitcoin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Last Saturday, August 16th, a sudden old coin migration took place on the Bitcoin chain. 31,968 Bitcoins, valued at approximately $3.78 billion that hadn't moved in 3 to 5 years, were moved overnight. This was the largest such move in the past year, like a collective flip of whales. These old players weren't making these moves lightly. Looking back on January 24th, 2024, 33,803 Bitcoins were transferred, triggering an immediate market rebound. On March 23rd, 95,090 Bitcoins were sold, directly hitting a local high. On June 22nd, 43,641 Bitcoins were transferred, further fueling the decline. On July 30th, 29,994 Bitcoins signaled another high. On December 24th, 23,012 Bitcoins were once again stuck at the local top. And now, another 31,968 Bitcoins have been mined. While it can't compare to last year's peak of 95,090 Bitcoins, the volume is still staggering. Simply put, the market may be about to change. Don't be foolishly shouting "go" from the mountaintop when the market goes on a roller coaster ride. Bitcoin has recently been stuck at $118,000. While this may appear to be a common price level, it's actually a combination of a technical price level and an on-chain sentiment indicator. Why? Because the data is clear. This is the average cost per person for short-term investors holding the tokens for less than a month, collectively holding 1.69 million Bitcoins. Therefore, whether this level can be held firmly determines the short-term market trend. If it holds, short-term traders will profit overall, selling pressure will be reduced, and they may continue to increase their positions, ultimately stabilizing the market. If it falls, new investors will be immediately trapped, potentially triggering a wave of stop-loss orders and sending the market into a roller coaster of downward volatility. Don't underestimate these short-term traders. They are the engine of the bull market. On the one hand, they bring in new money and absorb the selling pressure from existing investors. On the other hand, their profit and loss mentality directly determines the market's temperature. Even better, if they can maintain their profitable periods and gradually convert their holdings into long-term holdings, they can help lay a more stable foundation for the bull market. Therefore, $118,000 isn't just a price line, it's a watershed for market sentiment and capital flows. If it holds, the recovery is likely to continue. If it doesn't, a correction could soon begin. As of yesterday, the Bitcoin price was approximately $115,300, and the on-chain NUPL indicator reached 0.556, indicating that more than half of investors are making money. Since the end of April, the NUPL has remained steadily above 0.5, indicating that everyone's wallets are flush. It's no wonder that the price has consistently hovered between $90,000 and $120,000 while repeatedly hitting new highs. The problem is that when too many people are making money, it's easy for some to be tempted to lock in their gains, making the market more susceptible to short-term volatility. History has repeatedly proven that excessive unrealized profits require sideways trading, pullbacks, and turnover to transfer chips to new investors, prolonging the bull market. While the NUPL is currently high, it hasn't yet reached the ultimate overheated bull market range of 0.7 to 0.75. Therefore, it's likely to undergo a cycle of heating up, resting, and rising again, rather than an imminent peak. Short-term selling pressure may emerge, but if it can hold steady between 110,000 and 115,000 and then reposition its holdings, a subsequent push towards 120,000 or even higher will be more likely. In short, the bull market is still there, it just needs a breather. Please like and follow us for the latest 24-hour updates from the cryptocurrency, blockchain, and mining communities. Click the bell to join our channel and become a member, receiving your membership code Monday through Friday. Recently, the queues on Ethereum have been as long as those for the Spring Festival travel rush. 893,599 Ethereum worth $4 billion are stuck in the withdrawal queue, with withdrawals taking 15 days. It's like, on-chain banking, please be patient. Just then, a high roller, 0x2AC9, couldn't resist and simply swapped 4,242.4 stETH for 4,231 Ethereum, a single transaction worth $18.74 million, just to cash in immediately. What makes this move? Either he's desperate to cash out before the flowers wither, or he's a seasoned trader eager to free up his funds to buy the next wave. To put it bluntly, it's the cryptocurrency equivalent of a scalper. Time is money, and quick cash is always worth a small loss.
After completing the exchange, this address immediately transferred all the Ethereum it received to the Kraken exchange, presumably in preparation for cashing out. The STH to ETH ratio should be 1:1, but the user received 11.4 fewer Ethereum, effectively losing $50,500. While this percentage is less than 0.3%, if the Ethereum price were to drop by more than 0.3%, he could actually have the last laugh. However, the fact that he was willing to pay $50,000 as a toll to get out first inevitably raises questions in the community. Did he sense something?
Has been perceived to be in the future. We've been building scalable infrastructure, layers of enabling infrastructure for about a decade, anticipating that all the activity of the internet and the web will move to Web3, and Web3 is really the natural evolution of the web protocols, sort of a re-decentralization of the World Wide Web. So Ethereum is scalable enough, affordable enough.
The current Ethereum market is reminiscent of a Spring Festival travel rush ticket rush scenario with queue jumping and price jumping. On one hand, millions of Ethereum are waiting in queues for unstacking, creating a flood of potential selling pressure. On the other hand, large investors are willing to cut in line and cash out early, even at a slight discount. Cash in hand is paramount. The problem is that if this queue jumping situation continues and the reserve companies and spot ETFs that provide the market with liquidity don't have the appetite to backstop the market, prices could very well come to a screeching halt. Monero, the old guard of privacy coins, had been expected to retire in peace, only to be slammed by upstart Qubic in August. Qubic is a public blockchain project developed by IOTA co-founder Sergey Ivancheglu. Under the guise of a hash power experiment, Qubic initially teased everyone's interest by stating, "Monero experiments are underway." A week later, Qubic unveiled a drastic move, claiming to have spent a month crippling Monero's hash rate and reorganizing 6 blocks, effectively declaring, "Big Brother's remote control is now in my hands." This drama was even more thrilling than a palace drama.
Qubic founder Sergey Ivancheglu packaged the attack as a democratic experiment and initiated a vote to determine the next 51% attack target. Candidates included Doge, HKEX, Scash, and ZC. In the end, Dogecoin was elected with a margin of over 300 votes, far exceeding the other options. Dogecoin is the next target. It may be because its daily mining reward is as high as $3.2 million US, which is much higher than Monero, which can Qubic bring more fuel. Dogecoin is a meme coin whose network security depends on SCRYPT. The algorithm and low hash rate threshold mean that if Qubic successfully takes over, it may trigger market panic and cause short-term price fluctuations.
在工作量证明，也就是 POW 的区块链上，如果某个矿工或矿池掌握超过全网一半的算力，它就更容易挖出一条工作量更重的分支。也就是说，它可以替换掉最近的历史区块，修改和撤回交易记录，达到非法牟利的效果。2018至2020年，以太坊经典、比特币黄金、XVG 都经历过双花攻击。但是双花攻击呢，也不是万能的，很多事情它做不到，比如它不可以伪造别人的签名，不能凭空造币，不能单方面去修改协议。
Qubic presented a bird's-eye view, meticulously reviewing the attack. Founder Sergey Ivancheglo even delivered a chilling remark: "Please, do not resist." While this may sound like a challenge, it's also a subtle threat. If a POW network can be easily overwhelmed by computing power, it's a design flaw and unworthy of the survival of the fittest crypto jungle. The criticism is now directed at Dogecoin. Despite its massive market capitalization, protocol updates have been repeatedly delayed, and the script algorithm doesn't seem to be able to withstand the onslaught of modern computing power. What's the mood among the Dogecoin community right now? Most likely they appear calm, but their hearts are pounding.
Partnering with S&P Dow Jones to develop tokenized indexes, Centrifuge breaks through 1 billion and becomes the leading RWA brand? Can Mitsubishi and Sony's collective entry shake up the traditional chables? JPYC the first-time bonus?
With the RWA, real wage accounts market, what financial giant wouldn't want to grab a piece of the action? JP Morgan Chase rushed into US Treasury tokenization with its Onyx project, prompting Goldman Sachs to launch its own RWA market. BlackRock even launched its Buidal fund, with its capital soaring to over $500 million, effectively taking the top spot. Franklin Templeton also ventured into the crossover market, integrating blockchain technology into mutual funds with FOBXX, effectively transforming traditional wealth management into DeFi. As for Ondo Finance, it's focused on developing a popular version of US Treasury tokenization, offering USDY and OUSG, offering investors more options.
The blockchain infrastructure platform Centrifuge has recently performed outstandingly, with a total locked value of TVL successfully surpassed $1 billion, becoming one of the few real-world assets to achieve this milestone RWA platform. CEO Baji Illuminati said that this breakthrough was mainly due to the institution's move from testing the waters to actual deployment, and the market's strong demand for on-chain asset allocation, indicating that the RWA track is releasing greater vitality.
Yeah, so it's a really good year for real world assets. So we have regulatory tailwinds in the US is emboldening a lot of the institutions who've been interested in tokenization to finally make a step. Major players like BlackRock putting their weight behind tokenization and really investing resources and brand and team to grow and scale tokenized funds.
In early July, Centrifuge and S&P Dow Jones Indices S&P DJI, launching a tokenized S&P 500 index product. This product, a professional fund regulated in the British Virgin Islands, has not yet officially launched. The S&P 500 is just the beginning. Specific industry and thematic indices will be brought to the blockchain in the future.
Centrifuge's approach to RWAs is a two-pronged approach. On one hand, it's leveraging Web3 native Anemoy to attract large traditional institutions. On the other, it's leveraging its own RWA launchpad to provide external support for new asset management companies on the blockchain. Currently, stablecoins and yield products are the primary buyers, but they are considering developing a DERWA that would be integrated with mainstream exchanges, wallets, and lending protocols, allowing retail investors to easily access tokenized assets. A report by Boston Consulting Group and Ripple is even more promising. By 2033, tokenized assets could reach $18 trillion, with a compound annual growth rate of 53%. No wonder everyone is so anxious to miss out on this RWA high-speed train. Japan actually began considering amending the Payment Services Act as early as the summer of 2022. The core message was that all stablecoin operators would be subject to regulatory oversight, whether issuing or acting as intermediaries. In June 2023, the new regulations took effect, labeling stablecoins as electronic payment instruments. Companies involved in these transactions were required to obtain licenses and adhere to strict user protection and anti-money laundering regulations. The problem was that despite the law's approval, the market was slow to respond. Over a year later, not a single registered company had emerged. Fortunately, some new developments have emerged recently, suggesting that things may be changing.
Japan Financial Services Agency FSA approval for yen-denominated stablecoins is expected as early as this fall, with the JPYC project attracting the most attention. JPYC Incorporated plans to issue the JPYC stablecoin through a registered remittance company, backed by liquid assets such as government bonds, ensuring that 1 JPYC equals 1 yen. Currently, JPYC remains a prepaid payment instrument. The company is preparing to obtain a money transmitter license, launch a compliant stablecoin, and establish an exchange with Hakka Bank's Tachika to expand its application scenarios.
We have been spending multiple years working with the Japanese regulators, with banking partners, with strategic partners, to unlock the ability for USDC to actually be the first stablecoin to be able to be used in the Japanese market. Not only the first dollar stablecoin, but the first stablecoin overall. This is a huge unlock.
Don't just focus on JPYC. Japan's stablecoin scene is actually thriving. In 2024, Hokuriku Bank launched a digital currency called Tochituka, backed by bank deposits, making it a pioneer in Japan. GMO Group also launched GYN, but this was developed by its New York subsidiary, and surprisingly, it's not usable in Japan, a significant development. Even more interesting, the three major banks, Mitsubishi UFJ, Mizuho, and Sumitomo Mitsui, as well as cross-sector players like Sony and DMM, are all eagerly eyeing stablecoins. Will the next dark horse emerge? A bank, an internet company, or an unexpected new force? The suspense is even more gripping than the ending of a Japanese drama.
NBA legend Scottie Pippen tweeted early this morning, claiming to have seen Satoshi Nakamoto in a mirror wearing the No.1 jersey. He himself wore number 33, and thus derived the mysterious code 133. Netizens quipped, "So the ultimate secret of blockchain is basketball number theory?" OpenAI executive Nick Turley smiled and reminded, "Although GPT-5 can help you write love letters, it may write the name of your date as your ex-girlfriend." Netizens lamented, "AI, it's basically credible, just like my boyfriend said I just play a game." Secret meeting of South Korea's 4 largest bank circles CEO plans to launch a kimchi-flavored stablecoin. Industry insiders suggest remittance fees will be cheaper than military hot pot, but investors are concerned. First, let's address the traditional issue of exchanges experiencing temporary maintenance. Coinbase research director David Duong asserts that demand for Ethereum remains strong. Treasury officials have amassed 795,000 Ethereum, worth $3.6 billion since August, directly acquiring 2% of the network's total supply. While retail investors are fleeing, large investors are holding on to the entire supply. Data shows that in the past 24 hours, Pump.Fun occupies nearly 80% of the market share. Second place Let's Bonk, the name itself carries a lot of mysticism, and bonk is equivalent to a market crash. Veteran players lamented, "In the crypto world, the platform name is much more important than the white paper."
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.